Hello, good morning. You're watching Market Cafe on ET Now, and I'm Vinny Motiwala, along with me, Sneesha as well. Saying a very good morning to you as well. How are we looking at the handover coming in from the US markets? Obviously, our Prime Minister Narendra Modi is there as well. There are a lot of talks happening, a lot of voices coming in from there, and a lot of meets that he is in terms of the top US bosses as well. What's the update there? How is the market looking like at least?
Absolutely, Winnie. A very good morning to you as well, and a very good morning to all our viewers. Now, let's talk about the US markets, and stocks closed lower for third straight day as investors weigh Fed Powell's comments on inflation. Stock futures were flat in overnight trading Wednesday after the market suffered 3 consecutive days of declines as the tech-powered rally faded. Futures on the Dow Industrial Average rose 23 points, and S&P 500 also rose nominally, and Nasdaq 100 futures were also slightly unchanged. So not a lot of movement coming on the futures front, but the tech-heavy Nasdaq Composite fell 1.2%, suffering its worst daily performance since the 7th of June. And big winner in artificial intelligence, AMD dropped 5.7% on Wednesday, while Intel retreated 6%. The Dow Jones Industrial Average slipped 0.3%, and Wednesday's decline came as the Federal Reserve Chair Jerome Powell said that more rate hikes are likely ahead to combat inflation, pouring cold water on investors who had hoped that the central bank was close to the end of its tightening cycle. Let's quickly shift focus to Europe then, and European markets lost ground in Wednesday trade after UK inflation data came in higher than what was expected. The Pan-European Stock 600 index closed 0.5% lower, with almost all sectors in the negative territory. Tech stocks led losses, down 1.6% amid concerns over global growth, while mining stocks fell 1.5%. Autos also dropped 0.5% despite strong new car registration data, as oil and gas saw a 1% uptick. Now, annual UK headline consumer price inflation was 8.7% in May, which was the same level as April. This is what the official statistics have showed. The monthly rate was also unchanged at 0.6%, and in unwelcome news for the Bank of England, core inflation, excluding energy and food, accelerated from 6.5% from 6.2%. That comes ahead of the central bank's monetary policy announcement that will happen on Thursday. So this is what the global handover will look like, fairly mixed from both UK as well as US. But Winnie, take us through what crude did and what other commodities did last night.
Absolutely, and let's look at the crude oil prices, because Brent crude oil prices have gone up about that $77 per barrel mark. This is the highest level that we're seeing actually overnight for Brent crude oil prices in almost 2 weeks as well. And now this on the back of a strong demand and that optimism towards the demand in the US markets. And obviously what everyone's watching out for is a sustained economic growth in the US that will drive the oil markets going forward as well. Yes, in terms of the recovery in China, that is something that everyone's watching out for over there as well. As of now, WTI crude oil prices are trading at $72 per barrel mark, around and slightly above those levels as well. So yes, keeping an eye out on that. After oil remains steady, this morning we're seeing a slight bit of a muted start for the Brent crude oil prices after an overnight run-up coming in for the Brent oil prices this morning. Moving on, let's look at what the gold prices are doing. Gold prices actually hit a 3-month low after we saw the commentary that came in from Fed's Powell. So keeping an eye on that, gold is around that $1,943 per ounce mark as of now saying.
Absolutely, and now let me quickly take you through all the cues that you should be watching out for in today's trading session. Now on the Lal Street, on the corporate action front, you've got Wipro, whose buyback opens today, and today is also the last day to buy GHCL, PNB and Torrent Pharma to be eligible for dividend. On the global earnings front, you've got Accenture that's going to declare its numbers, big numbers coming there, important ones, to keep an eye out on that. Among other events, you've got the Bank of England MPC minutes and Amit Shah to inaugurate the Gaurav Yatra trains. And along with that, Amit Shah will also launch BJP's Mega Yatras in MP. And on the auto sector then, in the autos front, you've got Mercedes, which is going to launch its AMG SL55 Roadster. It's going to be a swanky new car, so keep an eye out on all these cues.
And Prime Minister Modi has arrived at the White House in Washington for the second leg of his US state visit. Now, it is here where both the leaders are expected to address a joint session of the US Congress. PM Modi will be also holding bilateral talks with President Biden, and after which Prime Minister is also expected to meet the CEOs and cross-section of the Indian diaspora. PM Modi will also be attending the state dinner hosted by President Joe Biden and First Lady Jill Biden as well. And you can see the visuals on of the menu coming in on your screens. The dishes that are being made as well and will be served have been put on display as well.
There was still life on the table.
Do you feel ready?
Of course I do. I feel very ready.
How ready is the tent?
Meanwhile, the government has approved US chipmaker Micron Technology's $2.7 billion plant for semiconductor testing. The cabinet has given its nod to production-linked incentives worth $1.3 billion for the plant, which is set to be built in Gujarat. Let's hear out a word from the Micron president and CEO Sanjay Mehrotra. Says he had an excellent meeting with PM Modi and is impressed with his vision for India. Listen in.
Had an excellent meeting with Prime Minister Modi. Very impressed with the vision that he has for India and the advances that India is making. We discussed a wide range of topics, and we really look forward to greater opportunities in India. Micron is a global leader in memory and storage, and we are a supplier to for memory and storage in all end markets, from data centers to smartphones, to PCs, and today really fueling the AI engine as well. So we are excited about the opportunities that exist for the future of memory and storage. And again, congratulations to Prime Minister Modi on his excellent visit here. So far, it's going great from my understanding, and I wish him and India all the best.
And PM Modi creates history in New York. The Yoga Day event, led by Prime Minister Narendra Modi at the United Nations headquarters, created a Guinness World Record after seeing a participation of most nationalities the yoga session. Speaking at the session, PM said that yoga is truly universal. It is a way of life. PM was joined by President of the United Nations General Assembly, Saba Kurisi, and other dignitaries as well. Remember, yoga's soft power has consistently featured in Modi's policies ever since June 21 was declared as the International Yoga Day in 2015.
The power of yoga, not only to be healthy, happy, but also to be kind to ourselves and to each other. Let us use the power of yoga to build bridges of friendship, a peaceful world, and a cleaner, greener, and sustainable future. Let us join hands together to realize the goal of one earth, one family, one future. I conclude with a wish. Sarve bhavantu sukhinah, sarve santu niramaya. May everyone be happy. May everyone be healthy.
And shifting focus to the news-making comments that came in overnight, the Federal Reserve Chairman Jerome Powell has affirmed that more interest rate hikes are likely in the months to come, as tackling inflation still tops Fed's priorities. Noting that inflation has cooled but remains well above the Fed's 2% target, Powell said the central bank still has more work to do.
The Fed remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. There are some signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up in recent months, particularly for individuals aged 25 to 54. Nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at last week's meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, we will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and inflation, economic and financial developments.
Let's move on and talk about Uber, because the global ride-sharing giant Uber has actually announced its decision to slash 200 jobs within its recruitment division. This comes as a part of its ongoing efforts to maintain steady headcount and streamlining its costs as well. Remember, these reductions represent less than 1% of Uber's vast global workforce, which currently stands at 32,700 employees. Also, Move follows a previous layoff of 150 employees within the company's freight service division earlier this year.
And tech giant Intel has agreed to sell 20% of its stake in IMS Nanofabrication to PE firm Bain Capital. And this deal is valued at $4.3 billion. Intel reiterated that Bain Capital's investment in IMS will ensure a significant market share for its tools that are being widely adopted by chipmakers.
Let's move on and talk about what is happening over Amazon. Now, a U.S. Federal Trade Commission, the FTC, has filed a suit against Amazon, charging the retailer with enrolling millions of consumers into its paid subscription Amazon Prime services without their consent. Now, the FTC has been investigating the sign-up and cancellation processes for a Prime program since March 2021. Amazon shares fell as much as 1% overnight trade in the US markets.
All right, and with that, let's quickly slip into a short break, but don't go anywhere. We'll come back with more news and updates shortly.
Welcome back, and you're watching Market Cafe on ET. Now, let's look at what the Asian markets are doing this morning as well. Yes, US markets ended lower. Asian markets have opened up a bit on the weak footing as well. Nikkei is down 0.3% in trade as of now. Let's look at what Hang Seng is doing this morning as well. Nothing exciting coming in on that front as well. Hang Seng is down more than 2% as well. That's a one to watch out for as well. Shanghai markets, that too have traded in the red as well. Exciting there as well. In terms of obviously what is happening, let's look at ASX 200 as well. That's the Australian index that is not doing anything exciting as well. So Asian markets also have seen a fall coming in this morning. Kospi, that one is also managing to stay in the green. Kospi, even in the last couple of days when you've seen, has managed to do differently from the rest of the world right now. So keep an eye out on Kospi. That's up almost 0.4% in trade. What we're also looking at is the SGX Nifty. That is indicating a bit of a muted start for the Indian markets. Look at it, it's down almost 0.2% in trade. 18,867 is what the SGX Nifty is at, 41 points down as of now. Nothing exciting expected from the D Street. So keeping an eye on that, Snehi.
Absolutely, Vinny. SGX Nifty indicating a muted start. I wonder if we'll hit those life highs on Nifty today. But welcome back, and you're watching Market Cafe on ET Now. Thanks for staying tuned. Let's move on then, and Sebi has issued circular to standardize format of trading preferences. Sebi's aim is to ensure clients are permitted to access all SEs. Ankur Mishra is on the phone line with the details. Ankur?
Yes, in an interesting circular which has been released by Securities and Exchange Board of India, it wants to standardize the format of trading preferences. Now, why it is done so? Because it aims to ensure that clients are permitted to access all the active stock exchanges. That means brokers may not have access to all the, meaning the membership in all the exchanges, but wherever they have that membership, the clients should have the option to choose the exchange. Nothing should come as a default. In fact, it should be the choice of clients on which exchange they want to choose. Now, what we understand is that this could be beneficial for Bombay Stock Exchange, where the future and options participation is lower as compared to National Stock Exchange. The idea is that indirectly the exchange wants to lower the risk of market concentration at one place, and therefore this circular has been issued. Now brokers are mandated to register their clients on all the active stock exchanges, and for existing clients 3 months time window is given to comply with. This circular will be effective from August 1, 2023, and after that that choice which the regulator has signaled need to be given to all the clients.
Okay, thank you so much for that, Ankur. But let's move on and talk about the aviation space. Now, with Indigo's mammoth 500 plane order from Airbus and Air India's recent 470 plane order, other Indian carriers are afraid of the duopoly in the Indian skies. The carriers, including the low-cost carrier SpiceJet, plans to move to the Aviation Ministry with these concerns. My colleague Sumit Chaturvedi is here to give us more details on this. What is happening here? What is the worry that we are getting here?
Well, clearly it's become very tough for small players like SpiceJet and Akasa, though Akasa is a growing brand, to survive, as they say, in the Indian market. It's duopoly already. Looking at the data, 90% of Indian aviation market is owned by only 2 companies or groups. Interglobe owned Indigo, and Tata Group's owned Air India, Vistara and Air India Express. So keeping that concerns in mind, now they are planning to approach the Aviation Ministry to go and tell them that this is the problem they can face in the coming years also, when almost 1,500 more planes will come to Indian skies in the next few years. So it's clearly not a very good time for low-cost carriers which are not doing very well to be in India, and they are now afraid of these big duopoly concerns. That's what is going to happen now when they come and tell this to ministry officials over the next few days. This is the concern they're having, and it's going to be difficult for them to survive. Market is clearly now divided among Indigo, which has 60% market share, and Tata Group Airlines with around 22-23% market share, and more to grab with more planes coming. So that's the concern they have raised. SpiceJet CMD met Aviation Minister over the last few days on this, and more actions can follow soon on this also.
Now, what could 970 rupees possibly buy? You might think 970 rupees could today get you 12 shares of IDFC First Bank, a stock that has given 3x returns in the past 1 year. With 970 rupees in hand, you could also back 10 shares of Lemon Tree Hotels, which has given 60% returns in the last 1 year. And for foodies out there, 970 bucks will get you more than a dozen shares of Zomato, which is up 80% from its 52-week low. But what is the mystery behind 970 rupees, you might ask? It is the amount that led to an ugly brawl in a restaurant in the National Capital Region. The brawl started after customers were asked to shell out 970 rupees as service charge. And now, the Department of Consumer Affairs has once again asked restaurants to not force customers to pay up service charges, especially if they are dissatisfied with the service provided. And mind you, the matter is still pending in the Delhi High Court. My colleague Samir Dixit joins in with further update on this. Samir?
Taking the cognizance of the recent scuffle that broke out between a consumer and the hotel or the restaurant staff on the issue of service charge, now the Consumer Affairs Ministry has written a letter to the Hotel and Restaurant Association and has mentioned that this service charge should not be mandatorily levied upon the consumers. The has advised to the association and its member that this levying of service charge on the food and beverage bill should not be mandatory. It should rather be voluntary, and it should be up to the discretion of the consumers whether they want to pay the service charge or not. Also, if a consumer requests that the service charge should be removed from the food and beverage bill, then it should be properly acknowledged. We have seen recently that because of this scuffle, the video that went viral on social media, now the government took the cognizance and has written to the Hotel and Restaurant Association and clearly mentions that this service charge is purely a voluntary sort of thing, in the sense that if a consumer wants, then they can pay the service charge, but it is not mandatory and it should not be forced upon the consumer to pay the service charge. This matter is currently in the court. The hearing is on, but largely the picture remains the same, that service charge is purely upon the service of the hotel or restaurant that is given to the consumer, and if a consumer feels satisfied and if they are okay to pay the service charge, then they can pay, but it should not be mandatory. Consumer cannot be forced upon to pay this service charge.
this matter is probably going to take a couple of years before it is going to be finally decided. But now it is almost 1 year since the status quo order is in operation. Be that as it may, just as Anurag has pointed out that, he has been repeatedly saying that the levy or service charge is not at all illegal or or should not be treated as an objectionable charge. But I also, on the other hand, have repeatedly held my stand that the levy or service charge, even though the restaurant owners may justify levying of the service charge on the ground,
we are not here to judge who is at fault and who is not. But the fact remains there is nothing illegal about levying service charge as long as you have been pre-informed. It's like a contract. I have told you before offering my product and service, this is what I charge. You agreed, you ordered. Then, in case of service deficiency, forget about rule. No restaurant worth its salt would like to antagonize a customer. If there is a service issue, forget about service charge. People waive off the whole bill. From what I understand, there was a 50% discount offered to this group as well, where the brawl happened.
Okay, on that note, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates, more stock-specific updates after this break.
Welcome back and thanks for staying tuned to Market Cafe. This is ET Now. Now, while the SGX Nifty is indicating a rather muted start to the trading day today, my colleague Ansh joins in with all the stocks that could be buzzing in trade today and all the ones that you should be watching out for. Good morning, Ansh.
Good morning. So Glenmark Pharmaceuticals would be the first stock in focus for today's trading session. So US FDA had conducted an inspection at company's manufacturing facility situated in US back in 2022. Now US FDA has sent a warning letter to this manufacturing facility. However, the company has not been selling any product from this manufacturing facility, so this warning letter will have no impact on the current revenues. Also, Glenmark is cooperating with US FDA and is committed to resolve their observations. Apart from this, Shyam Metalics will also be in focus as company has increased power plant capacity by 90 megawatt and sponge iron production capacity by 1,65,000 tons. LIC has reduced its stake in NMDC from 11.7% to 9.6%. City Union Bank will also be in focus as Board of Directors will be meeting on 26th June to consider raising of funds. All Cargo Logistics will also be in focus on the back of the business updates for the month of May. LCL monthly volume has increased by 3%, whereas container utilization remained high at 93%. Kalpataru project is also in our radar as Board of Directors has approved issuing NCDs worth 300 crores. Lastly, FTSE has announced free float adjustment in Shriram Finance, HDFC AMC and Timken India. The increase in free float is due to recent block deal. According to Nuvama reports, the expected inflows are $19 million for Shriram Finance, $16 million for HDFC AMC, and $9 million for Timken India. So keep an eye on the stocks.
Okay, thank you so much for that, Ansh. But let's move on and bring on board Lisa because we have Amber Enterprises that is going to be in focus as well. And there was a management meet. Now, Sidwell, the mobility subsidiary, has been approved as one of the few vendors for Vande Bharat. Lisa, what are the key takeaways here? What is the update that we are getting?
Well, yes. So, Amber, at its management meet, they have highlighted a few important takeaways. Firstly, let's see what's on Q1 FY24, how it's panned for them. So, they said that the unseasonal rainfall in May and June, in April and May, that has led to the REC demand being muted, and also accordingly, the industry is seeing an overall decline of around 20% on year-on-year basis. However, the other segment, that is their non-REC as well as components business, that is seeing some growth on the back of client ads as well as wallet share. They have also updated on their subsidiaries where they said that the Sidwell mobility subsidiary is one of the few vendors to be approved for Vande Bharat. Also, there are other subsidiary that is the electronic one, Ilgin and Ever, that's seeing a sharp growth on the back of import substitution. The management also highlighted that the electronics segment that can see a 30% CAGR and with the margin expansion improving towards 6 to 7%. The company is also forayed into HVAC solutions and they will be exploring more opportunities in this. Their long-term outlook that also looks quite positive for the next 2-3 years, as they said that the exports that is expected to scale up meaningfully, and also with large capex behind an improving utilization level, the ROC is set to rise to 15 to 20%. So Amber will be in focus on the back of these important takeaways in the management meet.
All right, thanks Lisa for all those details. Let's quickly move on, and Accenture is going to declare its numbers soon, and here's what you can expect from its June quarter numbers. Now the stock has surprised 3 to 4 times, the results have surprised expectations, but the stock move this time, the points that have moved, they seem to be muted in expectations, so the results are fairly muted. That's at least what the street is penciling in, and strong ramp up in bookings and outsourcing is expected. But on the other hand, they also see weakness in consulting growth at about 0.5% to 1.5% on a year-on-year basis. Now the factors to watch, what are the factors that you should be keeping an eye out on when Accenture declares its numbers? It's a potential from AI, what AI will be doing for Accenture's business, headcount trends for Accenture, consulting growth commentary, as well as deal booking. So these are all the important factors that you should keep your eye out on as and when Accenture declares its numbers.
Okay, and then let's keep it with IT, because we'll now move to the Indian IT, and TCS is obviously in focus via that, so we'll keep an eye out on this one. Now, the IT giant TCS has actually signed a agreement that is coming in with when you look at it, it's the British pension scheme Nest, which has signed a 1.1 billion contract for initial tenure of 10 years. So we are keeping an eye out on this one. Let's not forget the company has been working with Nest since 2011, and UK's Nest in 2021, Nest was awarded the contract to Atos as well. TCS is going to be in focus after this. They've committed a value of £840 million in this deal of with UK's Nest. If it is extended fully, the value to be at £1.5 billion as well. The deal win can actually drive additional sales for TCS as well. So on the back of this, let's keep an eye out on TCS. This contract win seems to be a big one coming in for TCS.
All right, and with that, let's listen into Gotham Shroff of Goldilocks Premium and his view on the markets and what sectors he's bullish on and what are his views on the broader markets.
The idea is to create wealth. The idea is to be in good stocks. The idea is to be in structural stories. The point about 2003, I was referring to just 2003, wherein a 3,000 Sensex became 6,000. And then obviously it moved up 7 times over a period of 2003 to 2007, 2008. But I do believe that at levels of 19,000, I think the large caps and the index is richly valued. And you don't have a global environment where everything is doing well. India has stood out. US markets have started to do well. It's only the NASDAQ which has actually gone up. Look at rest of Asia. None of the markets apart from Japan have done very well. European markets have just stabilized around 52-week highs. So it's not a global bull market as such. It's more like an Indian bull market backed by domestic liquidity and aided by foreign liquidity, which has really come in the last 1 month. And I think this trend of being stock specific will continue based on the ratio chart analysis, which I just put out.
Hi Gautam, this is Anisha also joining in the conversation. What's your take regarding IT? Because the street is divided whether it's bottomed out or not. What does the chart pattern tell you?
I think it's bottomed out. I think I'm very clear that for almost 15 months, this index went through a large correction after the 2020-2021 rally. And it went through a price correction initially. And I think the last 3 or 4 months has just been pure top quality time correction. You know, at a level of 18,900, you don't have too many sectors or stocks in the market which give you a good risk reward to take a trade or in fact, even an investment bet. And I think IT is right up there. So between now and the next, maybe till Diwali, I would actually bet for IT, pharma and metals, 3 of the underperformers of the last 6 months to actually do well and take the markets higher. You know, not to ignore the mid caps and small caps, which are obviously are in a zone of their own. So I actually like all the top, IT stocks, whether it's HCL Tech, TCS, Wipro, Infosys, pretty much in that order. And I think there is a 15% upside on the index and much greater upside for stocks.
But Gautam, you think we're in that kind of a market where the traditional heavyweights will continue to lag? Not much participation coming in from HDFC Bank, from Reliance, or for that matter, even SBI, as compared to what's happening outside of these indexes?
Aisha, that's exactly what has happened. These large cap names have really become elephants, and it's very difficult for them to now run. So that's probably the reason they will see their gradual move up from time to time. And the reason for Nifty's underperformance is because the SDFC twins, ITC to a certain extent, Infosys, TCS, Reliance, these top 6-7 stocks have just stopped moving at a, rapid pace. And I think this trend will really continue unless you have some major trigger. And let's not forget, you have the earnings season coming in next month. You have the general elections, some state elections, coming up later this year. So all of these factors will play on the index, but not on stocks.
Gautam, you said how, let's say a figure of 100,000 on Sensex, etc. is theoretical, but what's your own, analysis telling you where the Nifty is headed by the year end? Any number, any target in mind?
Well, you know what? It's been quite crazy in the last 18 months. The moment you would have given out a bigger target, you saw that 2,000 point fall on the Nifty and vice versa. It's been like a pendulum in the last 18 months. And it's the kind of world where you cannot look too much into the future. Yes, it's all good to talk about structural story, 5-year story, 10-year story. It looks good on paper, no doubt about it. But not every investor in the market can really handle that kind of patience, which today's world provides. But still, if you want me to put out a number, I think my working number on the Nifty has been 20,400. And I think maybe, before the general election results next year, we should get to that number. But the problem is, it's not big in percentage terms. I think the real return is going to be again in the broader markets.
Okay, so Gautam, let's talk about the broader markets. Share with us some ideas where you think one can still, get into and you still see a significant headroom which can beat the index returns.
Aisha, if you look at the Nifty 100 index, Nifty Midcap 100 index, for 18 months, it tried to get past that level of 33,000. So I think there were 7 or 8 attempts to get past that number and it failed. The broad range was about 26,000 to 33,000. So if you're going to have a 7,000-8,000 point kind of a breakout, I think the working target is about 39,000, 39,500, which I think is about 12-15% away from current prices. So that's the kind of upside potential that I see in the mid caps from current levels and about a 10 to 12% upside on the small caps from current levels, because we are looking at 12,000 on the small cap index, which is the lifetime high. But I think there are some very interesting pockets which have developed well. Cement, I think, looks very exciting to us, large cap and mid cap cement. Textile is finally making a comeback. The entire unlock space led by Indian Hotels, Delta Corp, I think looks very hot on the charts. Fertilizer has done exceedingly well. Auto ancillary, I think, is the story of the next 6 to 12 months. And not to forget the QSR space, something that I have liked all along, whether it's a Devyani or a Sapphire, and now even a Jubilant Foods. So some of these, stocks and the manufacturing theme, the industrials and the manufacturing theme. So these 5 themes which I just put out in mid cap, small caps, top quality is where we are focusing on.
Okay. I'll go back to that very basic point, Gautam, that in this kind of a market, what should be the best strategy to maximize? So you say, okay, stay invested, party abhi bachi hai. But should one simply stick to their investment and the long positions, don't look at SGX, don't look at what's happening on Wall Street, don't look at crude prices, just stay the course? Or it is time to now periodically start booking profits, let's say 10% at every 10% rise?
Nikunj, thankfully SGX is no more, so that's I think great for a lot of traders and investors who used to watch this every single day. But I do believe that the last 18 months was all about playing 2020 at the markets. You had to take those bets over few weeks to few months, and if you did not get out, you were on the receiving end, very, very quickly. So that was the last 18 months. Now I think we've got back into test cricket mode, which was basically 2020, early 2021, wherein you bought and hold and you played the run-up. So I think we are in that kind of a space wherein your passive portfolio should be about 60 to 70%, and your active seasonal kind of a portfolio should be 30 to 35%. And I think if you just stay with top quality stocks, because even so far the rally is still in grade A and grade B, it's not moved down to grade C and grade D. And therefore, I don't see any real froth in the system. Yes, we are overbought, but there is no froth. So just to answer your question once again, play long-term, buy and hold, I think is the right approach, because you don't want to get out cheaply when there is big returns to be made.
Okay, and with that, we're absolutely out of time on this edition of Market Cafe. It's a goodbye from Sehi, myself, as well as the team who put this show together. Don't go anywhere. The markets will take the action forward.